Well, hello and welcome to this special program. Markets are, of course, about 4 or 5% away from all-time highs. Will we get to all-time highs? Can the market continue to perform like it has been from the lows which were made in the end of March? That's the question. And who better to answer some of this than Raamdeo Agrawal, chairman and co-founder, Motilal Oswal Financial Services. He's with us here in our studios to boot. Raamdeo, great to have you with us here.
Good morning.
Thank you very much, sir, for making it here. What is your sense? We are in the midst of the earnings season.
Yeah.
And you're a very close watcher of earnings, and you've always believed that earnings will dictate eventually where stock prices go. So what's your reading of what we've seen so far from the fourth quarter earnings?
Yeah. So fourth quarter, we are seeing some positive surprises in terms of earnings, like Nestle, this thing, Maruti's number, or automotive particularly like Bajaj Auto and all. So they were kind of a bright spots. Banks across the board, like private as well as public. So I think in my 30-40 years career, this is the best, banking system across, like whether it is the private and public. You have very robust banking system, apart from profit growth and NIM growth and all that, lowest credit cost and all. Just that every bank is capitalized. Government doesn't have to give any subvention or support, capital support to any of the banking system. So I think it is really ready to fund the Indian economy's growth. So that's one good thing I see. And last year could have been a very good year, but for the Ukraine war and all the inflationary and logistic dislocation and things like that. But now I think that seems to be subsiding. I'm visiting a lot of companies, and all of them are saying that cost is definitely on the decline. It may not be in the Q4, this quarter, that they will get to see the benefit of that. But Q1, Q2 should be much better, because all those high-cost raw material inventory, they'll all get consumed in this quarter, and next quarter onwards, you'll see the margins expanding. So I think earnings momentum is going to build slowly from here onwards. Economy is likely to grow at anywhere between 6 to 7% with 4-5% inflation. Another bright spot in the economy which is developing is the stronger rupee. If you see the rupee today, I don't know how much it's trading. Yesterday it was 81.75 or 77. So continuously there is a strength of rupee. Current account deficit is slumped in the Q4. Is it one quarter phenomena, or it is going to be repeating, because the kind of services growth we saw in last 4 quarters, is it going to continue at that pace? Even at 15-17%. I think we are in a very interesting turning point of Indian economy. If by chance our current account deficit comes to about 1% or so, which can be funded very easily. And so rupee dollar, where we keep losing 3-4% every year, which again has huge implications everywhere, interest rate, inflation, I think there we might get some relief. I mean, even if 3-4% decline comes down to a percentage or so, because then RBI will try to build a reserve about $1 trillion, $2 trillion, whatever. So I think we are in a very good sweet spot. My sense is...
Before this acceleration, many have said that there will be a deceleration. After the third quarter, earnings saw lots of downgrades.
Yeah.
That we will go through this process of more downgrades this year, because the world is slowing down and some of it will show up here as well.
Yeah, but Indian economy has its own kind of momentum. The government has set its own momentum of 6-7%. It's the fastest growing economy. So in that context, see, if you look at even till Q3, first 3 quarters, the top line growth of corporates were like 15-16%. It's just that cost inflation, they just couldn't pass. And hence the earnings growth were very muted. Q4 is looking much better if you look at the aggregate numbers. So my sense is, going forward from here, we are going to see that at least 15-17% across the board Nifty earnings growth. There will be some spots of weakness. I believe some portion of rural economy, there the low-end discretionary spend is still pretty weak. But that always will be there, some reason or other. But I think across the board, earnings, once the earning momentums pick up, then, the retail behavior, FI behavior, and if you see longer term, see, one is that we are focused on next 4 quarters and things like that. But you look at 5-10 years, this is the only large economy where you can say 5 to 7% sustained growth for 10 years. Which economy you can say? I mean, China has done what it has done, but from here onwards, China growth story still remains intact, but their stock market story is gone nowhere. So after US, it's only India where you have an opportunity of going from 3.5 trillion to 7 trillion. And if the rupee doesn't depreciate in the next 5-7 years, then you can achieve that in maybe 5-6 years, So you could be staring at 2030. At least you invest for 6-7 years, which is economy going from 3.5 to 7 trillion. I mean, you and me cannot imagine how India will look in 2030.
So the long-term picture for India is very bright, but just talking about, say, the next 12 months, do you think banks will be outperformers or market performers? Because everyone's expecting good numbers. So in a way, it's priced in, it's already outperformed. And then there is a risk of NIMs contracting. So can banks generate that alpha, which they did in the last 12 months going ahead?
I would think it will not be huge alpha. But I think because, see, there are two largest segments of the market. One is this banking, second is IT. These two make up almost like 45-50% of the market.
Yes.
If IT in any case is slow down, so I don't expect IT to be in a terrific shape. Though in US IT is doing very well, but in India, because of their own earnings slow down, I think IT will consolidate in this year. So then only thing left is the banking. So, and banking earnings are going to be very good in this year. I don't, I mean, there are talks about NIM contracting maybe 10 bips, 20 bips or things like that. But still the top line growth will be pretty good. And operating leverage will also come. So, my sense is that the current year should be a good year for banking as a whole, but I don't know how big will be the outperformance. Market performing, yes.
All right. Hi, Raamdeo. So banks are continuing to do well on their results. But what about IT? That's been the big disappointment, right? That's the other smaller pillar. But that's disappointed. Very good quality companies. But if you're buying, like you said, invest for a little longer duration. Someone who's investing for 5 years odd, good time to start nibbling in right now?
Yeah, clearly valuations are corrected. The good time to buy IT. See, IT story of India is going to be the story of India in the sense that we are going to write this and it is going to come back with vengeance in the sense that the growth rate which might come down from say 12-13% to maybe high single digits 7-8%, 10%. So then something will change. When the US economy, world economy comes out of shell and they want to again build up investing in their IT and all, again we'll get orders.
So good time to start dipping into IT, you think so?
I mean, you can go stock by stock, but you have time in the sense that you can start building up your portfolio on IT also.
Preference between mid and large IT companies?
I think large mid caps.
Large mid caps about to become large
Who qualifies
caps?
under that?
Yeah, like LTI types, which are in $2-3 billion kind of a thing.
Yeah.
So they don't suffer from the lack of scale, and they also don't suffer from the large scale.
Yeah, that's very well put. So IT and banking is what we've spoken about, services, but what about the third leg, manufacturing? And that's the question that we'll put to Raamdeo. We have to take a quick commercial break here. We're back with that in just a bit.